So by placing a pending order here, we can join this strong movement, and often this movement is very profitable. As I speculate with the same trading day, I know that the most important thing for us day traders is when the market is most active, has the heaviest volume of trading and high volatility, when the wind blows into the sails, or as the Japanese would say, when the market is full of ki. You get the idea. There are better and worse hours to trade. The best time is when the sessions on different markets overlap. For example, when the trading hours in Europe overlap with the session in America. The best trading time is different for different currencies. For example, for European currencies, the best are European trading hours. If you are a day trader, you can take advantage of these hours and position yourself to be ready for when the price makes a breakout, and then continue to ride the trade until volatility dies down. Candle length in the chart shows the hours of increased volatility. You can see that here in the evening hours, the volatility fades, then wakes up again, and it lasts until the evening. And then again in the evening, the market falls asleep, and then activity starts again during the next session, and so on. This cycle can be seen. Thanks to higher liquidity, the spreads are lower and trends last longer. Within this period of time, it is more difficult for big players to manipulate the market. With timing solution software, we can build a model that shows high volatility hours over a very long time, for example 3000 days. Here is the chart of the pound against the dollar for the last 8 years. 100,000 30-minute candles. We use ULE module, calendar, we choose the time tab, and hours, 12 till 12:30 of the server time. Then we perform the efficiency test. Here are the results of the efficiency test. We enter 24 candles before 12 o'clock. Then in the target tab, we analyze through range. This is the range between the high and low of a 30-minute candle. We need to recalculate. This is the daily model of volatility based on the last 3000 days. On the horizontal axis, you can see the number of 30-minute candles before 12 o'clock. Let's replace it with hours, so it is easier to see. As you can see, the volatility was very low till 7 in the morning, actually till 8 a.m. These are price changes on the 15th of October. There was no volatility during the night. It started to rise later on, and its highest level was around 10 a.m. You can see how much the candles have grown during these hours. And later, after 5:30 p.m., the cable started to be running out of steam. And again, the candles have shrunk. As I mentioned before, the chart looks different for each currency pair. This is actually the average model for the cable, pound-dollar pair. But for example, for the Australian dollar, Japanese yen pair, that is traded mainly during an Asian session, this chart is completely different. Or for the Bitcoin, the hours of higher volatility are also different. Or for the Canadian dollar against the American dollar, when both these markets are open in the European afternoon. The model also looks completely different. Anyway, going back to the model of pound-dollar pair, we can see a thinner line at the back. This is how the average change looked in the last 3 days. If we change that to 5, for example, this line will become more and more similar to the 3000 day model. So let's give, for example, 100 days. This chart is more and more similar. 500 days. Here is a very interesting feature that shows the biggest changes on these candles. The default setting is 4%. 4%, it is a lot for a currency. It is unlikely that within half an hour the rate will change that much. So let's change it to 0.5%. As you can see, most of these 0.5% changes, here are increases, here are decreases of the pound rate, took place between 8 and 5:30 p.m. I will add 24 hours timeline here. You can see that these are the hours of the heaviest traffic and the biggest volatility. There is no reason to trade earlier. Well, you can trade the so-called London Breakout, i.e. when the price breaks out of a narrow trading range at the market opening in London. The price then goes either up or down, and this movement is really strong. Of course, someone could say that why do we count it in timing solution? After all, we can use the ATR indicator in the MT5 platform. You can see that the volatility measured by ATR is increasing during a day, and at night the market falls asleep again and the volatility is low. It increases during a day and then it fades down again. These hours can be displayed on the graph in MT5. And I did it with an indicator, trading sessions open close, changing the default time span. Low volatility starts from midnight or even earlier. The activity is very small during the night in Europe. And until 8 a.m. not much is happening. And then the swing starts again and the market falls asleep again. These are the night hours. I mark them with a cool blue color. And when there is more volatility, these are the opening hours of the London market. As I mentioned, for different currencies, these are different hours. This is what it looks like for pound sterling. The technique of trading the London breakout, i.e. breaking out of the consolidation range at the opening in London, is that we set up a pending order above the high or low of the price range of this evening consolidation, either sell stop here or buy stop there. And we wait what happens at the opening. Because at the London opening, large financial institutions often look for liquidity and pending orders that are set below. So by placing a pending order here, we can join this strong movement, and often this movement is very profitable. Thank you for watching the video. Any questions are welcome as always. You can email them to geomagnetism@gmail.com. I recommend you buying timing solution software, and when you buy it, please leave a note that you got this referral from me. I can offer anyone who buys this program and mentions me, Lemon, as the source of referral, 1 hour of one-to-one tutorial with screen sharing for free. Go shopping then and see you soon!